This is the weekly review for the week of January 9th to January 13th, as well as this week's Sunday preparation. So, coming into the week, I was expecting a bearish week to play out. So, on the daily chart, we had this YouTube model form rating this high, this daily high here, displacement break in market structure, and we had this daily fair value gap and breaker sitting in premium of this displacement range. So, and then we consolidated. So there was a lot of buy side liquidity here. So I was anticipating price to trade up into these high time frame PD arrays and then sell off. Um, Also looking at this high here in mid-December as the potential new quarterly shift. But that obviously did not play out at all. Um, so going into Monday's trading, I was looking for long setups on Monday because I was obviously anticipating the high of the week of the bearish weekly candle to form up here in the daily high time frame PD arrays, um, and also trade deeper into premium. This was that daily displacement range premium up here. So I was looking for price to trade higher, which is why um, I was looking for long setups on Monday. And we did have a very nice long setup here in hindsight. I didn't take this live. Should add the executions for later on. Um, I just didn't take this setup here live because it didn't raid any significant liquidity. Um, but in hindsight, this picture looks much clearer. So we're obviously coming into Monday looking for higher prices. And what I noted in my journal was that um, we had a consolidation here. We took sell side with a low time frame SMT into this fair value gap, and we broke market structure higher here. And ICT says after consolidation comes expansion. And then you have to choose whether it's going to be a retracement and going higher or a reversal and breaking lower. So, what I noted here, looking at this price action in hindsight, was that this long setup right here, or this entry right here at 8:55, 9 a.m., um, it's likely to be a retracement to go higher because it falls in line with that daily bias in terms of anticipating price to trade. The drawn liquidity should be those daily PD arrays, the daily breaker, and going deeper into a daily premium. And on top of that, we rated sell side liquidity, these relative equal lows, with SMT. So all of that confluence together um, should make it more likely for this to be a retracement and go higher um, than a reversal and break lower. And this setup did end up playing out for that 1.3R. And it would have given it to you prior to that 930 volatility. So looking back, I do think that this setup was very clean. When I was watching the charts, I didn't get interested until I saw this big displacement up, and by then it was too late because the move already happened. Um, and here we dipped into this gray box here is the daily breaker. Um, and in the PM session, I was not interested in taking a long setup, obviously, because we already dipped deep into premium on the daily, hit the breaker, and are already in that daily fair value gap, and we started having displacement off of that. So I was no longer interested in longs. And even though we didn't have a bearish SMT here, I was looking to get short, but this um, setup didn't trade up into premium, so there was no entry here on a low time frame basis. Now this entry right here is just based off of the YouTube model on the daily chart, because I was pretty confident that this was going to play out here. So obviously we have the raid break and market structure, return to premium in that fair value gap. So this was the setup I was looking at on the daily chart. And I just wanted to have some kind of skin in the game because, again, I was very confident in this playing out. And I wasn't too sure if on Tuesday or Wednesday, when I was going to be working and not really being able to look at the charts as much, I could potentially miss a low time frame setup. So that's why I decided to just enter in on the YouTube model on the daily chart so I could at least get something. So that's what that arrow entry was here. This was not based off of the low time frame entry or the low time frame model, but there was no entry anyway because we never made it up into premium here. But this model does make sense, and if we did make it up into premium here, I would have definitely taken a short setup because, again, displacement off of that high time frame PD array in line with the daily bias or weekly bias now, and also this looks like a market maker sell model. So this setup here and this setup here are they make sense to me, and they are very clean. Now, moving on to Tuesday is where things kind of got fucked up because I was still looking to short this, and I took a short setup here, and I took a loss because I was looking at this London high SMT kind of displacement down. This wasn't definitely the cleanest displacement and break in market structure down, but I ended up shorting this fair value gap and breaker. But what ended up happening is this ended up being the low of the week here. So on the hourly chart, we see we took the Asian low into this hourly order block. And then this 9 a.m. candle here, this was the Fed Powell had some speech or whatever, so it was high impact news, and that broke market structure up. So I think looking back, because for the rest of the week, I was just trying to short this thing. And if we were actually bearish, when I look at this now, we probably shouldn't have printed this type of bullish price action. Rating a low inside a bullish order block and having displacement up, breaking market structure, right? If this was actually bearish, we shouldn't have printed this on Tuesday. And if we were actually bearish, there's no need for price to come back up into these fair value gaps, I don't think. So after like the 10 a.m. closure of this candle here, I think that I probably should have switched my bias to bullish because this should have melted on the Powell news. That's what I was expecting, and that's what I wrote in my journal, that I was expecting the Powell news to just break down and go lower, but instead we went higher. So that's why I could see this loss as fine because this is literally where the reversal happened from bearish to bullish. Now, I did note after the break in market structure here that we did have sort of a bullish setup, but nothing was really super clean here to me because even if I was bullish, I could see myself potentially trying to like long this fair value gap here, which would have been in discount, and then I would have gotten stopped out here. But this ended up retracing deeper into the M15 fair value gap and then had displacement up. The lunch session and late AM session respected this fair value gap in this balanced price range here and ended up going higher. But I don't think there was just so much volatility here. I don't think this would have been high probability trading conditions. So I'm fine with taking this loss. Um, and then in the PM session, I ended up taking another loss because I was basing this off of the daily Power 3 candle. We took the AM session high at, I think this is 230. Yeah. And we had displacement down here. On the 4 minute, it was a little bit more pronounced. And I ended up shorting this fair value gap in premium, and price almost came to my TP, but then reversed and stopped me out because we ended up forming a counter setup here. So we rated short-term sell side, broke market structure up with displacement. Now the move down away from my entry was just a RTO to this bullish fair value gap before going higher. Probably if I took this trade on my phone and I wasn't really watching it, but I could have potentially just closed the trade after I saw this bullish setup forming. But we didn't end up respecting the daily Power 3 here because we didn't make the high of the day and then close lower. This is 4 p.m., the end of the PM session, and we just ended up marching higher. So wasn't really expecting that at all. I was expecting this to kind of trade lower and close lower, especially after taking that AM high, significant liquidity here with SMT. So I took another loss here. And I should also note that TradingView took me out of that position that I had on the daily chart. The daily short that I took off of the YouTube model on the daily. It ended up closing my position here when I got stopped out, right? I sold 33 here, but I bought 35 because that was the other two here. So I guess you can't have multiple positions open at the same time. Because I guess when I put my stop loss here, it trailed the stop loss that I had from this one above like the daily fair value gap high. It trailed it all the way down here and then took me out. So I'm out of that position now too. So then coming into Wednesday's trading, I was watching this bullish price action here. When I got onto the charts, I saw that this was like pretty clear bullish price action in that we had this fake run above Asia high. We took Asia low, consolidation, and then we had expansion away. And after expansion is either retracement or reversal. But considering that this looks like the Judah swing, London low is pricing in the low of the day, this is much more likely to expand higher. Also, given the fact that we've been printing bullish price action since Tuesday. But I didn't end up entering in on this because I still was like attached to the bearish bias that I had, which is eventually why I took a loss here trying to short this again. But these two setups here were clean, looking at it in hindsight. I ended up taking a short here because we had a higher time frame SMT and we're having displacement down. Now this one setup here did give that 1.3R, but I didn't take this one because we didn't have a significant displacement down in this break and market structure where we did here. But looking back at this holistically throughout the week, because since Tuesday we've been printing bullish price action, any of these bearish raids are probably just going to be a bullish RTO to go higher. So that's why this trade here doesn't make any sense, and I shouldn't have taken this trade. So yeah, took a third loss for the week here. And then in the PM session here, there was nothing. We just ended up marching higher. Then Thursday was CPI. I didn't really do anything here. There was nothing really clean. I just ended up like listening to ICT's Twitter space and kind of marking out the chart as he said to. But pretty much all CPI was just consolidation. And we shouldn't even be trading it anyway, just studying the price action. So after that on Friday, I really had no idea about the bias on Friday. When I came into the charts, I saw that we were respecting this H1 fair value gap and trading had displacement off of it, and we had this SMT. I also noted that US 30 and Dow Jones left like very clean equal highs here. So because I didn't have a bias, I was just like thinking that price was going to potentially come up into this fair value gap and trade lower. Now I kind of ignored this bullish price action here, but looking at it in hindsight, this setup looks pretty clean. So even though we didn't have a higher time frame SMT, we came off of this rejection block here on the M15 time frame. We didn't have any SMT with like previous day's low or anything. If we did, then I would have been much more interested in this. But what I noted in my journal was that, again, we had consolidation, and consolidation leads to expansion, and then it's either retracement or reversal. And looking at this, we came off of this PD array, bullish PD array, had a M5 break in market structure, and we had this fair value gap right here, and this balanced price range from that bearish fair value gap there in discount. So this isn't, we didn't trade up into any bearish PD arrays here. So this is likely going to be a retracement and expansion higher than a reversal. And also this looks like a market maker sell model, or market maker buy model rather, especially when you look on US 30 that had these like criminally clean equal highs up here. So what I noted is that you could have taken this long setup, and it was highly likely to at least trade up into this fair value gap. And you would have probably partialed like the majority of your position here, rolled stops to break even, and then see if you could target the equal highs up here. And that's what ended up happening. So that's just what I noted for Friday. And then in the PM session, we did form another setup, but we didn't come down into discount. So we ended up trading higher. We had this SMT with the original consolidation, so NAS, and I think also US 30 took their original consolidation equal highs here. So I was looking to see if we could have a bearish setup form because we had that SMT, but we never formed a bearish setup here. And that's what I was watching for live, to see if we had any significant displacement down, but we never did. And again, this SMT, just like on Wednesday's trading, right, we're still bullish for the whole week since Tuesday. The SMT here was just a retracement, which was an RTO to go higher. And that same logic played out here, where we had that failure swing with SMT, but there was no clear bullet or bearish PA printed. So this was just a RTO to this M15 fair value gap here. Also this balanced price range now that overlaps with that M15 fair value gap a little bit. And also it was in discount from this dealing range here. And we ended up trading higher. Had a SMT with the lunch lows, broke market structure up, but we never came down into discount again, and we marched up higher to take previous day's high. So this was definitely a pretty confusing week, but I think that the key lesson was really just watching this bullish price action on Tuesday here. Looking back at it in hindsight, I think this gave the story for the week, because if we're actually going to be bearish again, we probably shouldn't have printed this. And there was really no reason to come up into these fair value gaps to just then trade lower. So after Tuesday, probably should have been looking for longs, and then we had those clean longs in the early AM session on Wednesday. Those should have been taken. And then we had this clean market maker buy model long setup here as well. That should have been taken. So that was it for the week. In terms of what I'm thinking for next week, we do have a good trading session next week. There's no crazy high impact news that like can't be traded, like CPI and FP, FOMC. We do have PPI, but ICT says we can trade that. The same with all of these other high impact news. The only thing is a bank holiday on Monday, so that's probably just going to be consolidation, but the rest of the week looks pretty good with high and medium impact news. The only thing is I'm not really too sure of the bias. So I'm not sure if this is the quarterly shift anymore. I'm looking how we respected this daily bullish order block, and we're kind of violating these bearish PD arrays here. And now my focus is looking towards these equal highs up here. Because it just doesn't make sense to me, if we're bearish, why we need to retrace so deep into here to go lower. So that's what I see here in the charts now. So I'm just going to be leaning a little bit more bullish because we violated these daily PD arrays now. So yeah, and then just to note for Bitcoin, I had this trade queued up for a long time. It didn't get stopped out yet. For some reason, I ended up putting my stop loss above the swing high here rather than the fair value gap high. If I had put it above the fair value gap high, I would have been stopped out already. But I'm still in by a little bit. I'm not going to lie, this looks kind of scary. Even though I still view this as a Judas swing, I'm not sure why price is trading up so high and didn't just do that, because that's what I was expecting. We're trading so deep into this swing, so I don't know if we now want to take this liquidity or not, but I just wanted to note that for my reference. So we'll see what Bitcoin ends up doing. We'll see what US 500 ends up doing, but probably going to be looking for potential long setups coming into this week. But I think this should be a good trading week because there's no crazy news, so we'll see what ends up happening.